Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look at a couple of trade ideas that I'm currently monitoring. The first one that I want to talk about is to do with the dollar yen exchange rate, which saw a reasonable jump on Monday in wake of that much stronger than expected US ISM services PMI. So pretty much we've now had data showing that the US service sector continues to perform very well midway through the final quarter of the year, and we've also had the jobs data last Friday, which showed that the US labour market's also humming along very nicely as well midway through the final quarter of the year. So this idea that the US could be about to enter a recession anytime soon still for now seems a bit far-fetched, although a lot of people still predicting that in 2023, because of the lagged effect of all of these rate hikes that we've had this year. Remember, it can take anywhere up to a year for those effects to really be felt in the economy. We could see some more substantial weakness in 2023, but for now, things are still looking strong. So we've had this jump from the 200-day moving average here, you can see in dollar yen, but we're still in this downtrend. And I'm thinking for now, we're probably going to continue in this downtrend. And, I'm targeting this 131.50 to sort of 131 or 130.50 area, this support zone down here as my eventual target. We've seen other uh, dollar majors blowing through their 200-day moving averages. And I think dollar yen is probably going to be the next one. Now, why am I saying that despite the US economy still looking very, very strong? Well, you've got a strong economy, but you've got inflation, which is clearly peaked and is clearly coming back to the Fed's target. Okay, so we've got PPI data coming up on Friday, and then next Tuesday we've got CPI data, or both for November. Now, I think the trend recently has been downside surprises. I'm going to be playing this by ear. Um, but I am thinking that we could see another downside surprise that could potentially launch us down to this level here, or at least below the 200-day moving average, which would open up the door to a test of this area. I'm liking the technicals right now. We saw a recovery back to this sort of resistance. It was support, now it's resistance area in around 137.50, 137.60. We found resistance there and we're stabilized below it. That's very much in fitting with the idea that, when you just forget about the technicals, that you'd have a continuation lower. So let's see if the fundamentals can align with that. But yeah, I'm liking the idea of adding short positions in this kind of area in the next couple of days. Let's talk about stocks now, because I'm also liking what I'm seeing in stocks, which, despite pulling back quite heavily yesterday, 1.5% drop in the S&P 500, we're back below the 200-day moving average. The trend, just like the trend in dollar yen, is still looking bearish. The trend in stocks is still looking bullish, technically speaking, anyway. Still above the 21-day moving average, which has provided solid support in the last couple of weeks. Still within this trend channel that I've got marked up. We did fail to get above this downtrend, which has been in play for the whole year, which some people might think is bearish. But I'm thinking if the conditions happen that send dollar yen lower, basically down further downside inflation surprises, then we could be soon looking at a break above this downtrend, because it seems to me we've got quite a lot of momentum heading into this downtrend. Pressure's building. Um, a couple more days consolidation, but between now and next week, downside inflation surprises, if they manifest, we could get a break higher. And if we do, I'll be targeting this high here from September around 4,150. And let's see how high the Santa rally can go. The Santa rally that we often get at the end of the year in stocks is often pretty impressive. So maybe we could even get to like 4,200 before the end of the year. But we're going to have to wait and see, because it's not just inflation data coming up. We've also got the Fed meeting coming up next Wednesday. Um, they're going to do a slower, or it very much seems like they're going to do a slower rate hike of 50 basis points after four consecutive 75 basis point moves. But that's all very much priced in now. So people are going to be looking at like the new economic forecasts, the new dot plot, which is like where the different FOMC members expect rates to be in the coming years, pretty much. Um, and as always, Fed Chair Powell's tone on the economy and the outlook for future rate hikes and all that kind of stuff. Um, let's see how things play out. These are some of the ideas that I'm monitoring, guys. Hope you all enjoyed the video, and I'll see you all in the next one.